Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A counter to the counter bearish open and close black Mariposa yesterday, after the previous session's immediate countering bullish Harami and bullish opening white Mariposa. This has still left us with the overhead weekend gap between 101.34 to 100.73, but interestingly has pushed down below the base of the previously mentioned late April to date descending triangle pattern, which is currently 95.93 to 110.73. This was and is a nascent pattern, as we have only had 2 touches per side right now, but it's the best to be aware of this possibility and how we have closed for the first time below it. I would look for a second consecutive below the baseline as a minimum to verify this pattern. Overhead, we have congestion between 97.68 to 99.61, and further up, just beyond the gap, we have yet more congestion between 101.55 to 103.34, some of it dating from August 2014, though the market looks reluctant and unlikely to test it right now. Meanwhile, below we have some previously highlighted congestion at the October 23 high at 93.79. However, prices also seem reluctant to press far lower as well, having halted ahead of this level yesterday. In the bigger picture, the market is caught approximately between 2 necklines. The overhead dark blue neckline of the July to November 2023 head and shoulder top is one, that's currently at 116.26, and the other is the bright red neckline below of the September to November 2024 head and shoulders top, currently at 87.29. Now, this is quite a wide band, but it does set the opportunity for one of 2 possible scenarios. Either the whole action this year is one huge topping action or one huge halfway hesitation. The doors are open for both possibilities right now, so please just be aware. So far today, well, higher open, just under the baseline of the proposed descending triangle, and a move up from the open, but peaking so far just over the September 2023 high at 97.68 before coming down to that lower baseline of the descending triangle. Spot gold. A second bearish black crow, and a significant one after the previous session's key reversal down. Not only was it the lowest low and low close since late March, but prices dipped down through the combination of a pair of 50% Fibonacci lines for the October 25 to January 26 move at 44.35 and the May 25 to January 26 move at 44.20. Not only that, but prices dropped down to test, though not yet breach, the rising gold long moving average, currently at 44.04. This is talking about yesterday. This is a significant move, as the last time we dipped down to the long moving average was back in late March, and prices back then swiftly executed an about turn and pulled higher. This time it has been more considered, a more considered move lower, and thus I think we will see further attempts lower. Overall, the market continues to move down nicely from the main pattern here, one made here at the start of this year, which is a bright red, big, late January to late February bearish shift pitchfork. Prices are today closer to the bright red middle time below, which is currently at 43.09. Now, this bright red bearish shift pitchfork has been a pretty good showrunner for this market here since its inception. And so far today, a further move lower from the open, below the pair of 50% Fibonacci lines and now below the gold long moving average, and starting to approach the bright red middle time. This is a very significant move lower. and I'd watch carefully for 2 consecutive closes below the still slowly ascending gold long moving average. Further down, we next start seeing some possible support from the lesser Fibonacci line at 41.61, and that stretches down to the March low at 41.05. And this March low is very significant. Bitcoin, a second bearish black crow, and a significant one after the previous session's key reversal down. Not only was it the lowest low and low close since mid-April, but prices dipped down, closing below the April 25 low at 74.44 and halted at what may turn out to be, so far, the unhighlighted neckline, currently at 73.921, of a possible late April to date head and shoulders pattern. Prices also finished up just short of the significant slowly rising green short medium moving average. It's currently at 73.666. Meanwhile, topside, well, that is still capped, as it has been all of last week, by the 61.8% absolute Fibonacci line at 78.028. Though this time it had the added reinforcement of the slowly declining mauve medium moving average, currently at 78.563. Barring the support already mentioned earlier, the move down has been within a fairly free area. Now further below we have lesser Fibonacci supports at 72.023 and 70.929, but the next significant support would likely be the dark blue breached and seemingly repaired lower bull channel line, currently at 69.549, with just below it the November 21 high at 69.047, and that's of the August 21 to January 22 head and shoulders top. Now going back to the dark blue shallow bull channel. Now how good is this bull channel? Does it have a question mark over it? But for now it does, and it will do. I previously asked if this bull channel, this shallow bull channel, was either a potential halfway hesitation or a basing action, and to be honest the question still hangs around the market. However, I will say that having seen this action since February with a failed attempt higher in early May does lower my expectations of it being potentially a bearish halfway hesitation. At the same time, the lack of positive sustained bullish action also tempers expectations on the upside somewhat. Now so far today, a further significant move, a further dip this time, below the neckline of the proposed recent head and shoulders pattern, and also below the bright green short medium moving average. Though we have not had this move lower confirmed as yet, so we have not had a close below the neckline. Far less than the ideal 2 consecutive closes below it. It nevertheless still will likely prompt me to start looking at potentials, if not actual targets below, in the near future.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.